How are you guys doing today? I'm going to start this video off slightly different. And the reason being is I believe this video is going to get a decent amount of attention. And before I start, I want everyone to know who is talking. I am Matt. I am 28 years old, and I started investing in 2012, of which I started really getting on my current way of thinking and my current way of investing in the late 2014, early 2015 timeframe. Since then, I've been able to build about $350,000 worth of a portfolio. And most of the time when I talk to you guys on YouTube, I talk to you about the $230,000 that I have in a dividend investing portfolio. What you see on the screen here is how I manage my money, how I allocate, and how I understand where my money is coming from and what companies it's coming from and what sectors it's coming from. And if you haven't already, please hit the subscribe button because I talk about these things all the time. I release about 1 or 2 videos every single week. And I really want to talk to you guys about something extremely important today. A lot of the videos that I make, I end up getting comments in the comment section down below saying, where do I get started? How should I invest here? How should I invest there? And I'm not trying to belittle people when I say this, but those comments are generally coming from people that have a decent amount of debt, which is nothing wrong with that, and they don't have anything invested yet. And 3, they're really trying to find out their way to get rich quick. And unfortunately, I don't think that there really is a way. If there was, then I think it would be all over the place, or you might have found it already, or you know people that have done it already. And so this video is really to get you to understand what I think you need to know in order to get invested in the stock market or just investing in general. So what I wanted to do is highlight 4 different things. So of which I think are the most important things that you need to understand before you personally invest your money into the market or just investing in general. And I think the reason being that this is important is because I started around 2012 to 2015 not necessarily having an idea or a plan as to what I wanted to do. I thought that investing in companies like Sony was cool, investing in penny stocks was cool. I was looking for stocks that were like under $1 because I thought, well, if they just increased to $5, I'd triple, quadruple, 5x my money. And so with that, I really had no idea what I was doing. I was still learning. I was still trying to teach myself what investing in stocks was all about. And so, yeah, I was investing blindly. I was trying my best to ensure that I had money invested, but at the same time, I wasn't really following a plan. And with that, I think it's extremely dangerous because when you don't have a plan, you can switch between plans or you can switch between strategies. And that's not necessarily a bad thing if you do it mindfully and you do it purposefully and you do it gracefully. But what I was doing was one day I was switching from dividend investing, the next day I was switching to a penny stock investor. And what that was doing was having a lot of churn in my portfolio. And so what I've done personally with a lot of the questions that have come into my comment section about what I should do or what should I invest in is I generally have a 4-part approach of that. And I generally respond with that, but I think I've gotten enough questions where I believe that it is important to actually write them down and document it. So first and foremost, I think what everyone needs to do before they get started in investing, stock market, real estate, or anything, is understand their time horizon. And the reason why this is important is because if you need the money tomorrow or next week or 3 months from now, you really shouldn't be investing the money. Anything that you invest in, whether it's real estate, stocks, bonds, that money could disappear tomorrow. And I'm not trying to fear you into not investing or anything along those lines, but I think it's extremely important for you to understand that there is risks with any sort of investment. And if somebody tells you otherwise, you shouldn't invest with them. Of course, there are things that are more, I don't want to say guaranteed, but more or less risky than others that are probably safer investments, but there are no guarantees in investing. And so if you need that money today, tomorrow, you'll invest it very differently than if you need it 20, 30 years from now. And it might help you understand what exactly you want to put your money into. Is it something like real estate, stocks, bonds, what have you? And the second most thing, and this helps shape that as well because it plays right along with your time horizon, is how risky do you want to be? If you are someone that makes a lot of money and you really don't care if you lose whatever you're investing, I don't necessarily suggest this, but if you really don't care and you don't mind if you'll either be filthy rich or in 30 years you'll have $0 because you gave it your all, then have at it. But I think what you need to ask yourself is, if you look at the value of your portfolio one day and it's down 10%, are you going to want to sell everything and get rid of it, or are you going to want to continue to invest because that probably means the stocks are currently cheaper than they were yesterday? And so that is not a leading question, but it gets your mindset prepared. Is it something that you want to be getting into the third part of this? Is it something that you're going to want to look at every day, or is it something that you're going to basically set and forget? And this could also help you understand whether or not you want to invest in something that's highly growth related. Are you going to want to invest in startups? Are you going to want to invest in blue chip stocks? Are you going to want to invest in bonds? Are you going to want to invest in? And so understanding what your risk tolerance is will help you understand what avenue you want to go in your investing portfolio. And this leads me to number 3, and I kind of touched it in part number 2. How active do you want to be in your investments? This is going to be extremely important, because if you are someone, and I'll give you multiple examples, if you want to be someone that is actively managing your house flips, or you don't mind running out and unlocking doors for your tenant who locked themselves out, or if you like to look at the ticker symbols every day and what have you, then that will also help you understand what avenue or what you actually want to invest in. And the reason being is, if you want to be extremely active, you don't mind hustling for your money. A lot of times if you look at something like real estate, if you are the personal owner of the real estate investment, unless you hire a property manager, you are going to be very active in it. So not only will your capital be working for you, you will also be working for you. And that's not necessarily a bad thing. Some people are about that. But another thing is, some people are not. I am what you like to call lazy. I am a thinker. I'm not a worker, if that makes sense. So I'm an engineer by background, so I like to use my mind to think rather than actually physically working with my hands. I'm lazy like that. So that being said, I personally like to invest in individual stocks. Now, before I get into that, that's just me. But that also being said, if you are someone that is really lazy, on the very far end of not really wanting to pick individual stocks or anything along those lines, there are things called exchange traded funds. And now what those are they generally invest in sectors or broad parts of the market, like the S&P 500, the Dow Jones Industrial Average, and that will allow you to invest broadly across the board rather than investing in individual stocks. Now, that might be something that's for you, or maybe you want to be a little bit more active with your investments, and that will lead you into where you want to be. Now, number 4, how often do you want to invest? Now, the reason why I ask this, and this might not necessarily be the most appropriate way to frame this question, but what I'm trying to understand is and I think that this mostly pertains to the stock market, but I also see it pertaining to real estate or other investment types. If you plan to invest monthly, and all you care about is setting and forgetting your money and having it just go into an account You know it's invested. You never have to look at it. You know what it's invested in, and you never have to look at it again until you need it 20, 30 years from now, or maybe you look at it once a year. That would mean that you're most likely an ETF investor and you have it set up with your, say, financial advisor, your Fidelity accounts, your Charles Schwab accounts to put, say, $1,000 into your account every month, and at the end of that month, it invests in the S&P 500 index fund, and you never have to touch it unless you want to look at it. Now, there are other folks that are extremely active in trading, and they trade, say, 10, 20 times a day, and they're called day traders. They do that with foreign exchange, they do that with ETFs, they do that with individual stock securities, and there's nothing wrong with that. But I think that there's really three ways that you can look at this. There's, the day traders, there's the swing traders, they trade when the stock goes up, down, once or twice a month, and then there's the really long-term horizon traders that invest once a month, twice a month, and they never really sell their investments. And so I think that this is extremely important to understand because this is how you're going to formulate your strategy. And it goes back to what I was saying before. I was switching between wanting to be a penny stock investor, which is really, really risky, and then I would switch to the next day being, I want to invest in AT&T because I know it pays a steady dividend, and that's something that I really care about as potentially dividends. Now, I'll walk you through my example so that way you can kind of understand how you can formulate your own strategy. And I'm not saying that this is the right way, but I'm saying how you can use these 4 steps here to formulate how you want to start investing on your own. For me, I personally have a time horizon of 20 to 30 years. I personally want to invest in things that are medium to low risk. And I generally, while I actively watch my stocks very often, and I like to see them go up, I like to see them go down, what I concentrate on most is the dividends from my investments going upwards. I invest, generally speaking, twice a month, and what I generally do is I'll invest in something and rarely sell it. I do sell things when I notice some things are off, but I generally do not buy daily, sell daily, or anything along those lines. What I'll do is maybe when I see a stock go down very large in a month, or if I think that the company is doing okay and they had a good recent earnings report, I might invest in that company. What I am then doing is formulating this entire idea, my long time horizon, my low to medium amount of risk, actively looking at my portfolio a couple times a week and investing once or twice a month to say to myself, what type of strategy works for that? And for me, that type of strategy lands on dividend growth investing. And another thing, if you really want to get simple, is maybe instead of how risky you want your portfolio to be, I would say maybe another thing is, what do you want to do with your investments? Do you want your investments to pay you on a month-to-month basis? Do you want just your total value of your portfolio to grow? And that might also help you if you want to, say, become a dividend investor, real estate, startup growth company. It might help understand and formulate your investing strategy. And so I'm really hoping that this helps you get started in investing and it leads you down the right path. I think so many people are so adamant about trying to understand what's the right thing to invest in, and they'll listen to so many different people. And I think what they need to do is search within themselves and understand what's right for them. Because what might be right for me, or what might be right for Graham Stephan, or what might be right for PPC Ian, might not necessarily be right for you. And if you don't invest in what's right for you, you're always going to feel off about what you're investing in, and you're never going to settle on a single strategy. And I think what the worst thing to do is churning on your strategy too often. And what might end up happening is you get enough of amount of money where you find out a strategy might not work for you, and so you'll tweak your strategy. But what I think is most important is you form a foundational strategy that works for you. And I honestly think that that's it. I really hope that this video finds you guys well. I really hope that this was informative for you. Another thing that I want to mention before I sign off on this video is that you should hit that subscribe button. No, in actuality is if you want to invest in, let's say, a certain strategy and you think that it's right for you, throw $1,000 at it. $1,000 might be a lot to somebody, it might be a little to somebody, but I think if you invest, say, $1,000, it might make you, it might give you an understanding of whether or not you feel good about what you invested in. And if you don't feel good about it, it maybe means that your strategy or what you think is your strategy really is not your strategy. Maybe you should double think or think again about what you're investing in. Now, for someone like myself who's a dividend growth investor, what I like to also throw into this, and this isn't necessarily what should be looking at for your strategy, but this is hopefully something that you can kind of understand. Each strategy is going to have its own questions you need to ask yourself, and what is best for that strategy, let's say. And so for someone like a dividend growth investor like myself, the things that I look at are, if the market goes down, am I going to be excited or not excited about that? And that's extremely important, because if the market goes down, it's going to mean, are you playing into your emotions and you're going to want to sell out of everything, or are you going to want to continue to invest through the cycle and invest in things when they're cheaper? And that is extremely important, because that also assists in understanding and acting with what you believe is your strategy. And like I said, you might end up being wrong, you might end up being right, but I think what ends up happening is, as long as you're strong and you have a strong foundation and you understand what you're doing and you're consistent with that strategy, you'll be way better off than switching between strategies. Because if you don't have a firm entrance and exit strategy with respect to investing, I believe that you'll always end up in the negative way. So personally, for me, if this isn't necessarily for you and you don't necessarily care too much about understanding what you want to be in, just follow what Warren Buffett does and invest in the S&P 500 index fund, and just continue to invest very consistently in the S&P 500, and I believe you'll do well. Are you going to make Dan Bilzerian money? Maybe not, unless you're doing very, very well for yourself. But at the end of the day, if all you're trying to do is make a steady income and invest that money so you feel safe, just S&P 500 is probably the way to go. Some of the wisest minds that I know just are very consistent in dividend ETF investing, or just ETF investing in general, and they just set it and forget it and don't ever really think about it. So really hope this video finds you well. I will hope to see you guys on the next video, and I hope that you get a lot of joy and information and insight out of this video. If you don't, leave a comment in the comment section down below. And if you have any insights also about what I've said in this video, also leave them down in the comment section down below. Thank you guys, and I hope you guys have a great rest of the weekend. Cheers.